Welcome students. In this edition of live virtual revisionary classes, I, CA Ashish Gupta, Joint Director Board of Studies, welcomes you all. Now student, in today's session, we shall take the topic of security analysis, that is chapter number 4 of the paper 2, Advanced Financial Management, CA final level. Now student, as we are going in this revisionary session, of course, we hope that you must have gone through the lectures that are recorded versions are available on website, that is BU's Knowledge Portal, or even you must have attended classes at that time. Now student, in today's session, that is security analysis, one thing very important to note. This is topic is basically, we can say, is a beginning of the section 2. That is, what is section 2? It consists of basically 3 topics. One is security analysis. First, it starts with the security analysis. Then it comes security valuation. Then portfolio management. So first, we have to analyze what are the securities, where we have to invest. Now this our discussion start with, or we can say even portfolio management is a base for the portfolio management basis. It starts with the security analysis. Now, when we talk about the security analysis, it is one of the very important topic nowadays, because even the nowadays chartered accountants are getting employment in the investment with the investment bankers, even stock brokers, merchant bankers. Now they are supposed to analyze the securities. Of course, it is a job of the MBAs, but since our knowledge of finance of the chartered accountant is so deep in depth, that security analysis is also one of the very important area where we are getting the jobs. So student, my first disclaimer in this class is that this topic is only for the academic purpose. Of course, it we can say it impulse you, or it gives some impulsion to you, or it prompt you to do the analysis and start investing. Of course, you can invest, but my request to you here, but we shall keep our discussion limited to academic purpose, because this topic is very vast, and even full-time employments are there with the security analysis job. So we shall keep our discussion limited to academic purpose, and please do not indulge yourself in any trading or any market trading, etc., or option derivative, because this is classes only solely for the academic purpose. Now let us start our discussion. Of course, I shall refer the same notes that we have done our in earlier class. If there is any addition, I will separately write in the separate color, that is maybe the green color. Okay, students, so let us start our discussion. I hope my screen is visible to you.
Yes, sir.
Okay. Now, when we talk about security analysis, so see what I have done. I have taken there is a Saransh publication, if you know that is last mile referencer. Okay, so I have taken the pages from there because this is very useful. Of course, please note that this Saransh is not the replacement of the, we can say, our study material or other publication. It is just a brief. So when we start our security analysis, it involves systematic analysis of risk return profile of various securities. Now, I need not to tell you, because since risk return profile word has been used very frequently in the topic of portfolio management that you have done. So we can say it is a beginning of the portfolio management. The two approaches, that is fundamental analysis and technical analysis, are vague in carrying out security analysis. So that is called, we may use FA, and technical analysis may use TA. Okay, so because we may use it very frequently, so please remember we can use TA and FA. Now, when we talk about fundamental analysis, it is one of the very basic feature. It is one of the very basic feature, and what it starts with the dividend growth model and PE multiple model. Now, when we talk about fundamental analysis is based on the assumption that share price depend upon the future expected dividend expected by the shareholders. Key variables or the investors must monitor to. Now here they have to analyze the key variables. What are these key variables? Economy-wide factors, industry-wide factors, and company-specific factors. So accordingly, if we can say that, see what happens whenever we have to invest in any securities. So generally we start with the assuming that the shareholder expect the form of dividend. Of course, capital appreciation is one of the major nowadays. We can say now it is a major consideration, and especially for the short-term investor, because whenever we start with the security analysis, we have to remember that two things are there. One is long-term investor, another is short-term investor. So fundamental analysis, when we talk about it, is always concerned with somewhat long-term investor. Okay, so for the long-term investor, of course, capital appreciation is there, but one of the major decisive factor is earning, or we can say dividend per share. Of course, earning will be there, but what happens? Of course, please always remember all things are very interrelated. We have studied the sustainable growth rate in our chapter number 1. Now, whenever any company has very good earning rate of we can say rate of good rate of return on investment. So what they do, they pay the less dividend. Okay, retain the more earnings. So as much as they retain the more, their reserves go on higher side, and ultimately it benefits the shareholders. So ultimately what happens? One of the sources earning per share. Okay, so that's why we use the PE multiple, because this is based on our earning. Okay, now if we are concerned with the regular income, so we use the dividend growth model that justify the price. But however, this approach is quite very narrow approach, because sometimes it may work or sometimes it may not work. But since we have a long-term horizon, so we have to consider other factors as well. So for this, what we do, we carry out a thorough analysis, and this analysis is basically the fundament. This is 3 analysis we have to carry out: industry, economy, and company analysis. Okay, student. So now when we talk about the economic analysis, so very fairly, when we start with the economy analysis, before we economy analysis, I just show you overall how we divide the security analysis. Now, when we talk about the security analysis, basically it is divided into 3 parts. Our discussion normally considers the 3 parts, and even every analyst has to see. I tell you one very important thing. Whenever we talk about anything, even in financial management, you must have studied that sometimes we use the combination approach. So even though a long-term investor, a short-term investor, but they have to carry out analysis, security analysis, both. Now, when we talk about fundamental analysis, as I told you, it is concerned with the long-term investor. Okay, it is concerned with the short-term investor. This is called technical analysis. Okay, now when we talk about EMH, so when we can say that EMH is something, of course, it is related, not we can say it is particularly related to long-term investor or particularly related to short-term investor, but it is a kind of a study, the market reaction to the information. So somewhat we can say that it is used for the both fundamental analyst and technical analyst. Okay, they want to know the market. So this is, we can say it is we can say it is a technique to understand the market and how the market reacts to the information. So student, now when we start with the fund security analysis, first it consists of three important parts: economy, okay, industry, and company analysis. Okay, these two make us to help understand the broad picture. Okay, and this is when we talk about the company analysis, it establishes the value benchmark. Now, when we talk about the economy analysis, see, economy is the foundation of any stock market. We can say is a every see. If I today I tell you what is the difference between the stock market of Pakistan and what is the and our Indian stock market. Of course, everyone will say for the Indian stock market. Okay, now this analysis starts generally done by the investment bankers because they have to invest for the long term. Now, if you know that whenever there are an FDI or FPI, FDI means foreign direct investment, they are investing directly into the any manufacturing or services activities. Whereas FPI, they are investing in the portfolio. When they are doing the investment in portfolio, so they have to look out for the shares of the companies. Even they can go for the mutual fund. So whenever they have to invest in the shares, so this analysis can be carried out by the investment banker as well as mutual fund as well. So they have to see how we start investing. First, they carry out the economy analysis. For the mutual fund, generally industry and company analysis is important, but for the investment banker, this analysis is the first start with the economy. They have to see in which economy we have to invest the money. As I told in my earlier class as well, the concept of brick was there somewhere around in 2007. So today we have to see in which economy we are going to invest because economy starts whenever economy is a strong. Of course, the chances of there then now it comes very many things are interrelated. Like when we have discussing the topic of risk management, so country risk was there, political risk was there. So country risk we have to consider from the economy. Economy is good, prospects are good, so then we can of course we can think of. Okay, of course, the factors later come that is relating to their politics. So then it comes up political risk. But first of all, we have to see whether economy is strong enough that it we can our investment it can generate the return for investment. And generally, what happens if you see that FPI are generally for the long terms. Okay, when it is for the long term, so generally investment we can say we have to analyze the investment from the long term perspective. So first we carry out the economy analysis, and for economy analysis, when we talk about, it is used to forecast national income with various components that have a bearing on the concerned industry and the company. Now, basically what happens, it is economy that impacts both industry as well as the company. So you know that if I talk you about industry and company, it is a what is the concept? Now, if say I say very simply, it is a say company. When I say company, I just do it with this. I think blue I have to use because it is little bit clear. So I say it is a company. Okay, when many companies are there, it forms the industry. So there are this. Okay, I just change it the color. Okay, now when we talk about the economy, so economy is quite a bigger concept. Okay, where the many industries are prevailing. So overall, we can say this economy, it is industry, and this is a company. So overall, when a group of company form industry and group of industry form the economy. So first we start our discussion with the economy, then we move to industry, and then we move to company. This is called EIC approach. Okay. And when we talk about, this is also called top-down approach. But sometimes what we do the reverse way also. We have identified any company, good company, then we say what are the prospects for the industry and what are the prospects for the economy. So this is called bottom-up approach and this is called CIC approach. Okay. So I can say EIC and CIC. CIE. There are two approaches. So when we talk about, we start with the industry and economy analysis. So it has a bearing on the industry and the company. Okay, industry analysis for the broad picture. Okay, so bottom up approach, this is quite narrow approach because we have first identified the company, then we are going the reverse. So it is somewhat narrow approach. Okay, broad framework is a top-down approach, that is EIC and it is CIE. Okay, now when we talk about the factors what that affect the economic analysis, when we start our when we do our study of an economy, what are the important factors for us to consider? Okay, so in this what we do, we carry out growth rate of the national income and related measures, growth rate of industrial sector, inflation and monsoon. Now this factor is quite important for the agricultural economy. Okay, inflation is also a very important factor because it impacts. There are, we can study, you have studied in your economics paper that there are inflation means stagflation there, deflation is there. So sometimes it is said that inflation means the prices are going up without corresponding increase in the income. Inflation is good when the purchasing power is going up. But if purchasing power is not going up, then inflation is not good. Even deflation means the prices are falling down. So it always does not mean that the deflation is good. Deflation is showing that the income is going down and economy may come into the recession. So that is very important. We have to see what are these other important factors for the economic analysis. Okay, now growth rate of the industrial sector. It is one of the very important. Like China. Why the China's economy is very so attractive? Because their industrial production is very high. Okay, of course, in India, we have also a good industrial production, but our industrial production are generally limited to IT services. Okay, we are not done that much good in the manufacturing sector comparing to the China. China is number one. Okay, even no country can afford to take the we can say we can to afford to take the rivalry with the China. Okay, now growth rate of national income, of course, it is one of the very important measure, that is GNP, okay, GDP, NNP. So all these factors are very important factors that determines the status of the economy. Because if the economy's status is good, of course, incomes are more, so more people will invest, more people will consume more, they will that, so their chances of income are more and more are there. Okay, good prospects are there. Now, when we talk about techniques, so these are some kind of techniques. Of course, these are generally theoretical purpose because quite bit, and practically it involves a lot of studies and lot of, but we have to just have a fair idea of the same. When we talk about the anticipatory survey, it is in the form of opinion of the future state of economy. So what we do generally, we conduct a survey type of a, okay, with the academicians, with the economists. Okay, we can take a survey of anticipatory what where you see the economy from, because what happens, everyone has their own prospects. Some may be very pessimistic, some may be very optimistic. So we have to take a fair view, or we can say we have to average view or consolidated view where the economy is going. Now next is the barometric or indicator approach. So generally it happens that there are some indicators in the economy, okay, that indicates the, we can say, some leading indicator means they indicate the status of economy some before the actual event take place or actual states of the economy takes place, whereas coincidental indicators are somewhat when they are we can say going along with the economy, going along with the economy. They are because their changes takes place as per the current status of the economy. And lagging indicator means it is the net effect or the results of the economic. So sometime economy. So we have to see what are these indicators from which we can analyze the status of the economy or the. So these are the leading indicators. Okay. Generally, these are the leading indicators: money supply, okay, industrial production, average weekly production, new order manufacturer, order of capital goods. So, as I told you in our my earlier class, that like if we are giving, we are getting the orders from the outside India, so it is a good prospect. Now, recently there was a news that India getting an order for the defense manufacturing items. So even sometimes you have seen that uh, the Google is establishing their factory, their IT sector here, and even just like Apple has, there is an announcement that the Apple is going to establish their factory there in the Chennai, etc. So all these news what indicates that there is a growth prospects in the economy. Okay, so these are somewhat leading indicator. Okay, now when we talk about the lagging indicators, okay, so these are the leading. Okay, so there are very important to note that there are some lagging indicators as well. Okay, when we talk about lagging indicators, so generally these are important. Coincidentally, we can say that some indicators you will feel that they are uh, mm, some roughly some indicators are not exactly say that we are some coincidental indicator. Generally, we study the lagging indicators. Those shows turning after the economy has already taken turn. Okay, so these are the turning points. Okay, so this is what we can say. It is somewhat kind of a industrial loan outstanding. Okay, bank loan outstanding. Okay, and unemployment rate. Okay, this is very important. If the unemployment rate is stay same or it is rising, so it is the symbol that the economy is not performing well because there are no employment opportunities and growth prospects are not that rosy. Now, when we talk, this is prime lending rate or it is a kind of a benchmark rate. Okay, ratio of consumer, uh, we can say that, interest rates. Sorry, my mistake. Yeah, yes. 1 second. One second. Interest rate. Yes. Okay, ratio of consumer credit outstanding, their personal income. So all these are somewhat, we can say these are the lagging indicators. Now, when we talk about industry analysis, before we go for the industry analysis, I just show you somewhat we compare the table. 1 second. I just draw out a chart. Okay, let us see. if I compare three indicators, okay, now I type is here is a type, it is a purpose, and these some are examples. Leading, okay, to predict the future. Okay, so here generally it is the stock market index. It is one just example only. There are many examples can be there. Okay, then we talk about the coincidental. Okay. Generally, GDP is used. GDP is very one factor where we can say it is a good indicator. Generally, it is a GDP growth rate generally used, or we can say lagging indicators. Generally, unemployment is very one of the lagging indicator. Okay. Sometimes you will see that both it can even be used unemployment rate if it is going on. It can also be used as a coincidental indicator. So sometimes lagging with the coincidental indicators are sometimes used, can be used interchangeably. Okay. So now let us discuss. Now we come to the industry analysis. Okay. So when we carry out the industry analysis, we have to see one second. 1 second. I think yes. Student, please note that we can use these indicators are basically the coincidental. You consider it as a coincidental because unemployment will be both. There will be there because some books you will say you will see that this has, unemployment has been used as a both. And when we talk about industrial loan outstanding is generally considered as a coincidental, whereas bank loan outstanding is considered a lagging indicator. Okay, so this is another very important difference. Okay, of course, we can see that both can be used interchangeably sometime. So don't worry about this. There is too much differences there. Basically, leading are very important. That has to be make a difference. Okay. Now, when we talk about this industry analysis, okay, so the various industries are there. Okay, industries analysis are because every industry have a different level of risk. Okay, so now it is a question whether vary with the industry to industry or it remains a constant. Because if it varies from to industry level of risk, of course we shall go for the industry that has a lesser risk. Okay, so and we have to see whether the return from one industry to differ over a period? Yes. Okay, would industry continue to perform well in the future? We have to see. Okay, when we talk about the industry analysis, so there are factors we have to see. What are the key sectors? Okay, and relative strength of each sector we have to study. So generally key sectors are, it depends from country to country. Okay, because in China, generally the, of course, IT is there, but generally they are in the hardware manufacturing. Okay, in India, it is IT software development industry is there. Whenever in context of India it is studied, it is generally considered as an software development. When we talk about the key sectors, we can say that these are IT, pharma, and steel, cement, okay, airline, okay, real estate, and some other you can also suggest automobile, okay, banking. So these are some key sectors or industry where we have to carry out the analysis. So whenever you see that, please very important to note that whenever we talk about Sensex or Nifty, these are indices of the stock market. So generally they consist of the shares of the companies of these key sectors. Okay, generally they consist of, okay, like even here is petrochemical, telecom. Okay, so we have to see what are the key sectors and what are the relative strength and weakness of each sector, because we have to see that whether the industry will, how it is the prospects. Okay, because IT sector have their own strength and own weaknesses. Of course, it is the earner of the foreign exchange for India, but side by side with the coming out of AI, in today's time, AI is impacting a lot of to the IT industry. Unless and until they have to change their self, unless they update their self, they may be wipe out. Okay, pharma industry, it is also very important that how it is, what are the relative strength. Okay, whether the good research R&D facility in India is available or not. Steel, it depends generally on the construction activity, steel and cement. So all the we have to see, because this is generally are dependent on the, of course, they have a very good prospects, but they have a only good prospect till the constructions are there. If they are subject, their capex expenditure are less in India, then of course these are their weaknesses. So we have to study a lot. Okay, now when we talk about industry, this can, how we can classify it. It can be from the product line point of view, sector wise, and business cycle point of view. Okay, so like product line, as I told you, this is telecom, etc. Even we can add here. Okay, not product. Product is basically consumable product. Sorry. Okay, automobile. Okay, it is there. Now, when we stock agriculture, mining, construction, manufacturing, okay, IT services, transportation, and real estate. When we talk about the cyclical point of view, so high growth rate. Okay, now these are the cycle based. Okay, so growth industries are there. The growth industries are generally they grow with the more advancement are taking place. They grow, cyclical means generally which move the business cycle. Okay, if economy is down, okay, so automobile industry is the first that is got affected, because if the income of the people or the consumer is less, so there are chances of less that they will purchase a new car. Okay, because whatever the indicator, because since student, we have seen a time where there was only used to be one or two, three car models were there. Okay, when I was a kid, there was only two models. One was Padmani, that is was and model was Fiat, and another was by manufactured by Hindustan Motors, and the car was model was Ambassador. Only two models were there. Somewhere around in 1984, 85, 85, somewhere around, the Maruti Suzuki has come into the picture, and they have come out with the Maruti models. Okay, after that they have come out Maruti Omni, Maruti this is Maruti 800, 1000. Then models have start coming, and post 2000, now there was this flood of the various different models. So why these models were there, and why the consumption? Because income economy was rising. Okay, India's growth was there, and consumers are ready to pay for the new car. Okay, today you see that the car is not that luxury, but there was a time where the car was, and the prices of the car and prices of the house was same. But today you can see that the differences is too much wide. Okay, of course, very luxury car may have a price equal to a house, but ultimately the difference for the simple car with the and simple house is very wide. So automobile sector is that sector that is generally go by the economic cycles. Then it is come the defensive industries. Generally, these are industry are not affected by the business cycle like food, essential commodities, pharma. Okay, if whether income is more, if the income are more, it does not mean that we will start consuming more medicines. Of course, we will go for a good health care. We will go to the private hospital. Okay, but ultimately it will be only in the problem when we have any problem in health problem. Otherwise, we are not for luxury. We will not go to the hospital. Of course, similarly, if the hotel industry, if I have a good income, the hotel industry also work well. Okay, because people start spending more, they go for the outing, etc. So these are the cyclical industries that are okay. Now, when we talk about this, okay, like here we have operating. Now, one of the very important factor for any industry analysis is the operating leverage. So, what is operating leverage? If I ask you, can anyone tell me? If you recall that you have studied in the paper of financial management. It is the element of the fixed cost. Okay.
Please explain, sir. Sorry.
Yes, sir.
Please, sir, explain. We are not able to recall. Please. Thank you, sir.
Okay. You are not able to recall. Now, see what happens in any cost structure. There are two elements. One is variable cost, another is fixed cost. Okay. Generally, what happens? Fixed cost always remain the fixed, irrespective of the volume. Now, say if I simply say, now you have hired a building, okay, and the rent is say about 15,000 a month, or not a building, just a office. Okay, now suppose you are providing some we can say some services, okay, that is chargeable basis on the per unit. Okay, it can be some like if suppose I just give you a very simple example, like nowadays earlier there was used to be a pen pencil examination criteria, but nowadays if you observe that now most of the examinations are going on online. For this, there are some testing centers where you go and there were some computers are there. Okay, and in this computer center, generally you go there and students take the exam. Now, suppose there are other factors. I'm just saying you have taken a office, or we can say you have taken a space where you are paying per month rent is 15,000. Okay, now you have start taking the some companies like TCS, or they conduct the exam. Generally, what they do, they outsource the testing work to the franchisee, or they can to some these testing centers. Okay, now say you have a 50 computers there. Okay, for each computer, for each test, say you charge 100 rupee. Okay, this is your income. Okay, other expenses we will consider, but see, if we say where you are getting a net income of say 500 rupee per student. Now what happens if you are getting this fees? So suppose in a month you somewhere get you around 500 student have taken the exam. Okay, so by this your income is 25,000. Now see, if this number is increase 500, say it comes 1,000, so your income will be 50,000. Even you deduct 50,000, so your income is net income is 35,000. Here when candidates were 500, okay, so your income was 10,000. Okay, so I say our income has increased 3.5 times. Okay, but our sales have increased 2 times. Okay, so this is called operating leverage. This is called operating leverage when the change in income is more than our change in the sale. And it is always said that leverage is a double-edged sword, where it can also be reversed. Now, if I say there are only 100 students, okay, if there are only 100 students, so what will be your income? And this, okay, so your deduction will be okay. So here we can say that, sorry, our income was say 100 students, so our loss was 10,000. Okay, so if I say my loss is 100%, not 100%, it will be say is a 200%. Okay, because first my 10,000 will be wiped out, so it is 100%, and then it is again gone minus, so it is 200%. Okay, whereas my fall in, or I can say I can say my fall was somewhat around 400 divided by, so my fall was 80%, but my income has gone down to 200%. So this is called leverage effect. Okay, so it is also very important to consider the leverage effect in the industry, because if they are very sensitive, of course it is very, so generally in IT sector, fixed costs are not that much there. Okay, so these are less prone to operating leverage. And financial leverage, similarly, when the interest element is there in our capital structure, cost of capital. So you have seen that if the earning per share, okay, if you're, so generally, but whenever we do the operating leverage, the formulas I write down here. If you recall that operating leverage is contribution divided by EBIT, and our financial leverage is EBIT divided by EPS, EBIT, EBI, earning before tax, because it indicates whenever if the financial leverage is on higher side, so little increase in earning before interest and tax will lead to more increase in the EBIT. So this is one of the very important leverage factor. Okay, now when we talk about the okay, so financials have similarly key factors other are industry analysis like past performance of industry, performance of product or technology of the industry, role of the government. Role of the government is very important. Okay, because if the government is any promoting an industry, of course, more subsidies will be given, more. So sometimes government may, like I just discussed, a very common point is there. Of course, nowadays the real industry is on a boom, but of course, constructions are going on there. So there was a time when after the freedom, government needs the infrastructure. So at that time, the demand for the civil engineers were very high, and especially if you recall that India has hosted the two-time a very major sports event. In 1982, it was the Asian Game, and in 2010, it was the Commonwealth Games. So in this time, both times, the construction activity like construction of the stadiums, flats for the or the residential quarters for the players, athletes, were on a higher side. So at that, government was more taking interest in the construction industry. They were giving the incentives and their payments were very fast. All these are factors are there. Okay, labor condition is one of the very important factor. Good labor should be there. Okay, labor condition means it can be also a labor condition means it can also be strikes, etc. So the labor condition of the in any economy is good. So then of course, like in China, of course, labor is cheaply available, and okay, there are lesser. Of course, the regulations are there, but still laborers are work very hard there. So China is one of the very hotspot for the manufacturing activities. On the other hand, where the labor problems are more, okay, in UK generally the problems are labor are more, so generally companies are not that ready to invest there for the labor considering. So it depends on where the labor, like in an IT industry, generally labors are blue collar jobs are not that much. Are labors are workers are required. Generally, white collar workers are required. So here it is a conducive environment for in India where the mostly qualified people are there. They are English speaking. So we can say it is employment. What are the workforce of available condition are there? Competitive condition in the market. Very important barrier. If the industry is that they can not any easily company can enter industry and enter into. Okay, so this industry are generally dominated by one or two players, like petrochemical. Okay, so generally, if the entry is free, so the competition will be more, margin will be less. But if the industry is that where the entry is restricted, like airline, I have given them the last class airline, so no company can start the airline business any moment. Okay, so we have to see the competitive conditions. Now, if I talk about the competitive condition, nowadays, Indigo Airlines is one of the very important uh, companies there, because here one or two airlines were there like SpiceJet were there. They have gone out. Okay, Jet Airways they have gone out. So generally now Indigo is having a monopoly type of a positions and entry is not that much easy. Of course, there was a because we have seen that recently when there are problem with the Indigo there. So what was the chaos at the airport? Because they were carrying so many. Okay, let me check. Uh, अशोक जी देखना ये YouTube वर्किंग कर रहा है नहीं कर रहा जी? हैं? नहीं राइटिंग वाला नहीं, यूट्यूब पे एक स्टूडेंट का मैसेज आया है, इज सेइंग सर यूट्यूब लाइव नॉट वर्किंग। जा रहा है? ओके ओके शैलेंद्र प्लीज चेक बेटा। हाँ
ठीक है सर, थैंक यू।
ओके। So, like here, we can see that in the recent scenario of a recent incident of the Indigo. So, there was a hue and cry at the airport, but no other. We cannot create a company in a day or two in a month that can solve this airline problem. Of course, the problem has solved it, but you can see that there was a hue and cry at airport. Flights were not available. Okay, and the prices of the flights were so high. So that's why we have to see whether the industry now cutthroat competition. Okay, if entry is easy, so cutthroat competition. So prospects of that industry may not be that much good, but because we have to invest in any company, the competition too much, the narrow margin will be there. Whether substitute product is there or not. If the substitute product is there, so that of course the consumer will move to other products. So these are our factors. See, whatever factors we are discussing, this is not only illustrative one. It is not the exhaustive one. There can be many other factors. Now, when we talk about the some very important factor is interlinkage with the other industry. Okay, it is very important, like automobile industry and auto and ancillary industry. As the very good example I can share with you, it is a kind of a joke. I don't know what to because I tell you, it is used to be said that I don't know whether it is a true or not. When the Maruti company was coming to India, it was start manufacturing. So there was some company like in Japan. Generally, they are expert in. They were working with in the repairing of the car. They have their own service centers, etc. There, so they were planning that. Of course, what we will do when we will come, Maruti will come here. So people will need the service center, authorized service center are there. Okay, to get fix up their car problems, etc. So it is a, I'm sharing, I don't know what is true, but it is a kind of a joke, or you can say it is generally quoted that. So the MD of this company has taken the flight from the Japan, and he has come to the India. Okay, he has landed at Delhi airport. Now when we has some Mercedes car has come to pick him up. Okay, so now when he was on his way, it got somewhat problem was there. So ultimately the car stopped working. So what happens? The driver or the company's guy taken. He's told, "Sir, you go by the taxi. We will we do some arrangements." So he has gone by the taxi to his hotel. Next day, when again the this Mercedes car has come to pick up him from the hotel. So since he was a know the every part of about the Mercedes, so he know that the problem in what is the Mercedes. So he said the problem in the Mercedes was that it cannot be fixed up before that. I think 1 month, because this part is not available in India, and it has to be imported from the Germany. So how you get it fixed up? So the driver told, "Sir, I have gone to the showroom. The same thing they have told. So what I have done, I have taken to some Sadarji that is near to our office. I have shown to him, and what he has done, he fixed up the problem by some very different part, but he had got customized it and fixed it up." So the moment he listened it, the MD said that I am not attending any meeting or any business meeting here. I am going back to Japan, because in a country where any roadside mechanic can repair the Mercedes, so our service center business may authorized service center may not done very well. So this is a kind of a thing. Sometimes we have to see what is the interlinking. Okay, if the product is complicated, of course, other related industries will be also good here. So this is one of the, like here in case of airline industry, the ancillary industry, we can say petroleum industry. As much as airline will be growth will be there, so demand for the petrol will also be there. Now, industry life cycle is very important. Now some industry are in pioneering stage. They are here in the new stage. Now, if we talk about today's time, somewhat we can say it is called survival of the fittest. In this time, only that industry pertains that can have a growth prospects, only that can prevail. So, like here in today's time, the two industries are in pioneering stage, which is in new. Okay, in time to come, they will of course, we can say that they will go up, or their uh, chances are that they will also grow. And in this, somewhat we can say that like 1 second. Okay, in the next we says expansion stage. So here the industry have a higher profits. Okay, their position is good. Okay, their position is good. They start earning the profit. Okay, because earlier they may have, now here we can say that here the expansion stage is airline industry nowadays, hotel industry. Okay, airline industry, hotel industry, all these industries are there. Okay, now they are in somewhat expansion stage. Okay, now next is stagnation stage. Generally, these are gradually coming down as the industry mature. Okay, now it is generally we give the example is a digital camera. Now even digital cameras are vanishing because now with the in a simple mobile, the photo quality of photography is too much good. Okay, so there was some first there were Kodak film. Okay, where we used to have a film were there. We used to take out the film. We go to the lab for getting it developed. Okay, they provide us with the negatives as well as the picture cards. After that, digital camera has come. Okay, there were a chip there was, and we used to chip. Never used to take any print out of these photographs. Okay, these are memories. But after the mobile camera come into the mobiles, so anytime you can take a picture, you don't have to worry. Now, if I say you take the screenshot of this slide, you will immediately take. But there was a time when anybody have a camera. Okay, rarely anybody has a camera, and the memory chip was very expensive and very less. You can storage. But now in a mobile where you are carrying a storage of something like 56 GB, 128 GB, 120, 132 GB. So this kind 64 GB, 56. So all these are available now in a simple camera. So nowadays the things are so industries. These are kind of example where some industry can go into the vanishing. Now very important. Though it is easy to say that we have to identify, but it is very difficult to say in which industry will pass through which stage. Okay, because sometimes it is very difficult to say, because earlier there used to be have some shelf life of an industry or of a company, but nowadays we don't know whether. So of course electric vehicle is now a pioneering stage, but problem is that how will they perform in the future, because more challenges are coming with the electric vehicles. Somewhere in recently I have heard about, like in a Ola electric manufacturing electric scooter, there was some fire incident over there. So whether this will sustain electronic scooter or this kind of a problem, so there are many factors. Okay, pattern of the industry may vary. One industry may have a pioneering stage for the 1 or 2 year. Okay, other may have a 5 year. So we cannot generalize, of course. Okay, it is one of the and there can be exception. Okay, this can be exception, because sometime, like I just give you a very example, very simple example is a good example. Paytm, digital payment, fintech industry, it is very one of the good example. Now before COVID, uh, there was not that much of any, of course Paytm was there, not COVID, sorry, it was before demonetization. Okay, before demonetization, Paytm was there, but that was not one using, because we were habitual of using the cash. But with the coming out the demonetization in 2016, it is 10 years back somewhere around. Okay, the digital payment and fintech technology has start booming. Okay, UPI payment has come into the picture. People start UPI payment. Now, if I sometime even you or even myself face a problem, sometime we are so much habitual of scanner that every time we take a pani puri or we take any, so we always say ki bhaiya shows a scanner. So it is some kind of exception. Okay, because of demonetization, nobody knows this. Similarly, when we talk about the concept of work from home, okay, so before COVID, nobody, of course, there used to be concept of work from home, but we have never what is an idea, because we used to imagine how we can conduct a meeting. But now with the help of Zoom link for on that we are using our for classes, that has come out, and ultimately IT industry has boomed up. Okay, because with the coming out of the Zoom, okay, because we are coming out with the, now we are working at a remote location has become possible. Now then there is a sport analysis. Sometime what are the, like, for example, I have considered the example of pharmaceutical. You can consider. So this, like for pharmaceutical, strength is there. It is a life saving. Okay, it is a strength. Okay, demand will always be there. Weakness, like for a country like in India, poor population is there. Whether they can afford the medicine or not, of course. Okay, now opportunities. Okay, exports are there, rising in purchasing power. So then is it even nowadays there is another one thing, Ayush Bharat. Now with the Ayush Bharat mission, the poor are also providing with the health services. So this will there are opportunities that pharmaceutical companies, for the pharmaceutical company, because they have a more demand. Okay, threats, import from China. Now if any other company can manufacture the same type of a drugs with the less cost, so of course the company, government start, or even the consumer starts importing the, from not consumer, generally distributors start the getting imported this cheap medicine. Okay, so we can say that these are some factors that for we use the industry analysis. Now these are some factors that affecting economic analysis. Okay, you can have a, we I have almost done gone through, because government attitudes, how government rate state of competition, I have discussed. Demand and supply gap, is the demand and supply gap is more, of course the factor is industrial prospectus is good. Okay, technology and research, it is very important. Okay, in India, see, R&D is very important. Okay, so like in USA, this is technology and research companies are more are there. Okay, because their facilities and what are the available are there. Barriers to entry, I have discussed product life cycle. In what is the product life cycle? What is the life of the product that I noticed? Cost efficiency and profitability. Of course, it is one of the factors. Now these are the techniques that is used in the industry analysis. Regression means we set a equation somewhere, y is equal to a plus bx. So by this we carry out the regression analysis. Input output analysis. Now once we have come out with this, our industry analysis, we come to the next industry analysis, we come to the company analysis. Okay, now when we talk about the company analysis, okay, there can be two things. One is qualitative, another is quantitative. So we can say that first we have identified the economy. Then in the economy, we have identified one industry. Now in one industry, we will do the analysis of many companies. Okay, so see, first, in the first part, we have done the analysis of many companies from where we have identified one economy. Sorry, first we have identified analysis of many economies from where we have identified one economy. In a one economy, we have carried out the analysis of many industry from where we have identified one industry. Now in this industry, we will carry out the analysis or for the many companies, and in this we will find one or two companies there. When we do the company analysis, so what are the factors or what are the fundamentals we have to look into? So these are the fundamentals, are can we say that there are two type of fundamentals. One is quantitative, another is qualitative. Generally quantitatives are number based. Okay, and qualitative, of course, these are concerned with the like what are the quality based, like here we stand competitive advantage. Generally quantitative are can be expressed in terms of number and they can be quantified. Qualitatives are somewhat subjective. Okay, they cannot be expressed in terms of numbers. Okay, now next is the quality of management. Okay, now here, sorry, corporate governance, it is one of the very important. The companies which have a good corporate governance, of course, they are the outshining others. Regulations, whether the regulations are favorable to the company or they are against. Location and labor management relation. Location is very important factor, because if any company is near to their source of supply of raw material and a market, they are in a more advantageous position. Like for a steel industry, in case of a steel industry, if a company has the location near to the mining location, they are most advantage because the spending is less. Of course, after the raw material is processed, moving of the market to the finished goods to the market is also very important factor. So location plays an important role. Then pattern of the existing shareholders. Generally, it is always said that a company which are closely held and which is widely held. Okay, so we have to see, because the company which is closely held, their shares may not be available with that much easiness. Okay, the companies on the other hand, the companies which have a uh, uh, widely held companies, or we can say the market capitalization or more. So they are generally said that they are good one. Like if we compare that Reliance, of course, Reliance Industry is number one in the stock market. But when we talk about the HDFC, its capitalization is more. Why? Because in Reliance, the stock that is a holding is much more concentrated with the promoters. Where is in HDFC, the stock market shares are more in the market, and that's why their capitalization is more. Then marketability of the share, it is very important. Shares should be easily marketable, or they can be sold in the market. Because if they cannot be sold in the market, so of course marketability is very, because their availability as well as disposal, both you have to see, because ultimately you are investing for some time, but you will not keep it for the whole life. You have to see that after some time you have to sell them. So these are some factors. Okay, now when we carry out the company analysis, so some important other things we have to identify, like we have to analyze the expected earnings of the company. This is one of the very important quantitative factor to find out the fair value or the intrinsic value of the shares. Okay, what are the now sources? This is annual report. Okay, balance sheet, income statement, and cash flow. Okay, so all these are statements, financial statements that are except this. This is the overall view because it consists of other notes as well. Management report, risk management reports are there, but these are some financial records or financial reports that generally we chartered accountant are very well versed. Of course, we can say that for this balance sheet analysis and income statement and cash flow analysis, with the coming of Ind AS or other IFRS, it is best become quite challenging. Now here, that's why the chartered accountant who have a good knowledge of Ind AS, sometimes they are also employed to analyze this balance sheet, because only they can correct the real, they can assess the proper impact of each and every item. Okay. Whenever we analyze the earning, These are some important criteria like earning before interest and tax, profit before tax, profit after tax. Okay, earning per share, per book value. Okay, DPS, dividend per share, yield, ROE, PE. Okay, what is a free cash flow? There is now a concept is coming. Free cash flow is coming now a picture, or we can say it is coming into the use. Why? Because it is always said how much cash is cash is accruing to the company. Now, because see what happens, generally the numbers or the we can say balance sheet or the profit and loss account statements are generally affected by the company's policies, okay, accounting standard. So sometimes there can be some chances of manipulations are there. Okay, but with the cash flow analysis, generally it can be observed that of sometime what happens, a company may have a good profit, but flow is negative. So it can be seen that why the cash flow is negative, because the company is not have a huge amount of receivable amount pile up in the receivable which are likely to bad debts. So on the balance sheet or the profit and loss account, they may say it's a good. But from the analysis of cash flow statement, it may be said that it maybe can be seen that the profit are is not easily convertible into the cash position. So it is will be quite risky. Okay, yields, generally what yields are used? Earning yield, okay, dividend yield. So as I told you, sometime even earning yield are very important. A company have a good earning per share is very important. Of course, they are giving a less dividend, but still they are good. Okay, so these are some ratios, and one of the very important ratio is used, DuPont model. Okay, generally in DuPont model, what happens? We see ROE. ROE is one of the very important measure, return on equity. Okay, then we discuss the sustainable growth rate. Okay, internal growth rate, sustainable. That we have discussed in the chapter, because sustainable growth rate is one of the very important criteria. Because if a company can maintain some sustain some good growth rate, the prospects of their uh, future prospects are very good. Because on the other hand, a company like going like this, their growth is going like this, and then they are falling. It is less, we can say, it is not preferable rather than a company is having this kind of a curve. Okay, because smoothness or the sustainability is very important factors nowadays. Then there is another criteria, EVA. Okay, economic value added by a company. Because if we see the formula, because this topic has been discussed, you have discussed in the business valuation. This topic we have discussed in the business valuation. So there we can see that not net operating profit after tax minus capital charges. So these are the capital charges. Okay, these are the capital charges. So we can see that over and above capital charges, how much a company has added to its value. Okay, that is called economic value added. So somewhere it has not a very old concept. Somewhere I think it has come out concept in 1980s, 1990s, and the company was basically Stern, and not company, Stern company was there, and even initially they were using some copyright on every EVA. Okay, so they were using this registered trademark, but now it is no more there. Okay, and okay, so these are some factors. Now these are some techniques that are used are there. But what is happening, correlation and regression analysis, because it is generally relating to the industry. Okay, we analyze in industry what are the relationship. If the industry is growing and company is also growing, so it is a kind of a positive regression. Okay, and we have to see some regression analysis. We have to develop some equations. What is the growth rate of industry and what is the growth rate of the company? Okay, trend analysis. Long term and if we relationship between the variable tested over a long period, we can say regression analysis for a long term, we analyze, then we come out, uh, uh, we analyze the correlation regression for a long term, then it becomes a trend analysis. Okay, decision tree generally what happens, it is kind of a, we have discussed it in the capital budgeting chapter, where we can say that some probabilities are attached. Okay, like here, it is nodes are there. If this happens, there are two possibility. Its probability is 6. It is probability. If this happens, there are two probability. It is probability is 0.5. It is probability 0.5. Okay, this is this. This is this. It is probability is 0.2, 0.8. Okay. Now, if I have to find the probability of this event, so what I do, I can count the, I multiply it. So this is probability 0.08. So this, for this event nodes, we find out the probabilities. So this is somewhat we can carry out the decision tree analysis. Okay, so there are other techniques as well. Of course, in study material, we have covered these techniques. So there can be other techniques as well. Okay, I'm just showing you one thing that have come to my mind. One second. Or we can say the company analysis. What are the factors? And these are the some share prices, share values related items. Okay, so when we say that factors, it is competitive edge, where the company's its earnings, capital structure is very important. If the company is highly leveraged, it means they have a huge debt. Of course, we should not refer this company because they are carrying a high risk. Management, we can say it is somewhat relating to the operating leverage and not sorry, financial leverage. Okay, operating leverage. That is their cost structure. Okay, financial performance. How are they are performing? Where now when we talk about the share value, historic prices of the share. Okay, economic conditions. And stock market conditions. Okay, so generally what happens, these factors are normally related to the future prices because their result will become later on. Okay, on the other hand, these factors are generally relating to the present prices. Okay, student. So we can say company analysis, we can divide, or we can say company analysis when we carry out, we have other methods also, or even this is illustrative. You can also use some other methods as well. Now, when we come with the technical analysis. So what is technical analysis? It is again, it is a method of share price movement based on the study graphs or the chart on the assumption that share prices trend are repetitive. Now here, I ask you very one basic question. Can you tell me what is the major difference between the fundamental analysis and technical analysis? Anyone, you share whatever coming to your mind. Please share whatever thought coming to your mind.
So technical analysis is share price movements,
Yes, yes,
and in fundamental analysis, it is economic, industries, and all the layers
yes,
are seen.
yes, yes, yes. Very good, very good. Now I tell you one thing very importantly. Sometimes what happens? Yes, anyone other want to say? Now I tell you very important point. Very thing. Sometimes we carry out. Uh, if you see the news channels, okay, where the G cinemas and other news channels are there are some chart analysts, okay, analysts were there. So whatever they give the statement, okay, nobody knows the future. Okay, nobody knows the future. So sometimes whatever the statement they give, there are some narratives. Okay, what happens? What is the difference? If we analyze the fundamental analysis, technical analysis is not concerned with the fundamental analysis. They say that fundamental analysis are nothing. Okay, according to the technical analysis, I'm just sharing you one thing. It is a common saying in the among the Gujaratis. भगवान भाव भगवान है. It means prices is God. Price is God. Price सब कुछ डिटरमाइन करती है. Price determines everything. And technical analysis is gone on this. They say we are not concerned with the fundamental. It may be possible that a company is a negative profit. I give you a very simple example. Many companies are there, they don't have any profit. They have losses are there, but still their share prices are going up. Why? It's prices. Market is there, demand is there. So technical analyst says, I will purchase the share, I will sell the share. Okay, it is. And one more important point. Technical analyst or as per technical analysis, loss booking is also very important. Okay, because we have seen in a fundamental analysis, we will go by this. Everything should be positive. Everything should be positive. Technical analysts say even though it is a positive, but the moment we feel it is start negative, because in a fundamental analysis they wait. In the technical analysis they don't wait. That's why fundamental analysis for the long term, technical analysis is for the short term. Okay, they go by the charts, they go by the price movements. Okay, so for them it is very important. So, and even it has been seen that sometime, like I just give you an example, even in case of adverse situation, like where sometime in Kargil war, there are some instances where Operation Sindoor was there. Instead of going down the market is up. So technical analysis is not considered like what will be this situation, that situation. They are say, if the price is there, I will earn. Okay, so this is one of the some assumptions are there. Market value of the stock depends on the supply and demand of supply, and that are governed by several factors. Like this can be rational or irrational. That's why sometimes irrationality also plays a role. Okay, and this which can trend continue with substantial period of time. Always relies on chart and analysis. So these are some, and what these are some factors like market discounts everything. Okay, market discounts everything means whatever information comes to the market, it will be discounted. Okay, 1 second.
Sir, one question.
Please.
So basically, what is the SEBI control if companies in losses and shares prices going up and down? So overall, if company is profitable, share should go in right way. If we
See,
see last
yeah.
many years, like many companies are coming up, going to share market was very tough. Now we are very legal. But overall, it's a investor's money which is going on toss. So it's a very dicey thing. I just want to understand like why.
No, I tell you. See, what happens? SEBI is meant for the investor protection. Okay, if you know that is a SEBI for the investor protection. Generally, they say that company. I tell you a very good. You have asked a very good question. See what happens. It was somewhere around in 1992 when Harshad Mehta scam has taken place. So what happened? At this time, I will also recommend to you. You also go to the YouTube because I cannot show it on my right now. On a YouTube, there is Jaspal Bhatti's serial. If you can understand the Hindi, there was Jaspal Bhatti serial for the share market. You just see this serial. It was a true incident in 1991, where the companies were formed to collect the money from the investor and they run overnight. So what happened? It was scenario in somewhere around up to 1992. After that, when SEBI has formed somewhere around in 1988, but main teeth to have to given them somewhere little bit in 92, and post this was Ketan Parikh scam was there somewhere in 1997, where was a MS Shoe scam was there. After that, post 1997, in somewhere in 1998, the SEBI has become a very strong body. Now their purpose is to not to like to protect the investor for such kind of a scrupulous activities. They are creating a company without any objective, and then they are collecting the money and running overnight. But if the balance sheet is there, loss is there, company is there, they are making the losses, and still investors are ready to invest. So it is the SEBI saying, okay, we can tell you, you read the prospectus, red herring prospectus. Every warning is, see, whenever there any investment ad is there you observe that there is some announcement disclaimer is there. The market is subject to this is securities are mutual fund are market subject to market risk. If you read earlier, this announcement used to be very short. In a 2 second was used to be 2 to 3 seconds, but now later SEBI has come out with a directive that this announcement should be slow. Okay, so that investor could understand it. So SEBI do this kind of a job. But if any investor is ready to dive or they have to take the risk, so it is up to them. But they should be well informed about the risk. The purpose of SEBI is to make the investor well informed about the risk. Say, if I say, I just give you a very simple example also. You have heard the Ponzi schemes. What are these Ponzi schemes? They give a commitment. They give a promise that we will double your money in the 3 years. Which business is there that can double the money? SEBI always says avoid the Ponzi scheme, but still people invest there. So it is the emotion, greed. Okay, generally market goes by the 4 factors: fear, greed, emotion, and there was one I forget. These are some factors that so SEBI is there to inform you, the investor, about the risk. If you want to die, like I just give you another example. On the cigarette, there is always a warning, statutory warning. Smoking of the cigarette is hazardous to health, but still we smoke. Okay, similar warning is on there. Hard drinks, or that is liquor, also is there, but still we consume. So it is basically the regulatory body is meant to inform the consumer or the customer. Is it clear now?
Got it, sir. But still, loss-making companies are coming up in IPO. So overall, this is.
Yeah. See, I tell you one thing. Your question is very interesting, but see, time constant is there. Generally, IPOs are coming because of the venture capitalist exit route. Are you getting my point? Mm-hmm. Because IPOs are coming. See, stock market is that a point that where we can discuss a lot. Generally, IPOs are coming for the exit route for the venture capitalists. They are eager to exit the venture. So, and other thing is that whenever, if you see that, if you observe that, generally whenever any IPO is coming now, so good news are start coming in the news about this company. Positive news are start coming into the company because it generates the confidence among the investors. Now, if you are seeing this, you are confident this company will grow up. So of course you will invest there. Nobody say, nobody, if a, say, I just give a very small example. Now, if a new IPO is coming, I say, I never, first of all, I tell you, I don't invest in the stock market at all. Although I teach this subject, but I never do my investment at my own. Now, suppose a company is coming out with the IPO, like 300 rupees share. Okay. But there is another company is already there, which is having a same price, also dividend paying, but still you are not interested to invest. Why you are not interested to invest in this company already existing? This has an existence for 100 years, because you want to know that, of course, it may be possible that this company may earn a huge profit some time later. So it is the appetite of the investor that they want to play. Okay, sir.
Okay, sir. Thank you, sir. Thank you.
Okay. So, student, what we do before we more discuss about the technical theory, technical analysis, we take a very small short break. Now, after the break, what we will do, we quickly cover the technical analysis. Then we will have a MCQs part for you. Today we have many MCQs so that this concept is clear to you. Now, in case if you have any query relating to calculation part or the, because in our assignment of this, our earlier revision, our main class, we have covered 4 questions over there. If you have any question relating to that, we can consult. We can also discuss with the same. Otherwise, I will today's in class. I will like to discuss the more MCQs to give you the more clarity. Okay, students. So we are taking a very small break of 10 minutes. Ashok ji, break is started. Okay, student, welcome back. Now, when we talk about technical analysis, so first of all, we start with the Dow Jones theory, and we can say that he is the father of this theory, because somewhere this theory has come into the 1929, and he has studied some two prices. One is the industrial average, okay, another is transportation average, railroad transportation, or we can is also called railroad. Now it is somewhat very surprising. In USA, there was some used to be in industry base. Okay, there were too many industry, transportation by railroad was everything was there. But today the scenario is completely different, because now there is no more manufacturing in USA. Okay, and transportation is generally by the private cars. Railroad transportation is quite less. Okay, even in India, the road transport is much more, rail transport is much more developed than any other country, developed country. So what they have done, they have analyzed the prices, or we can say the averages of the prices of the uh, these two prices, or this you can say averages or the industrial averages, and they have come out with the conclusion that the first of all, their tenet was the history repeat itself. Okay, so it is always not that it takes a time, because see, if we see, I since I'm 50 plus now, in my life I have always seen that if time comes when the stock market goes down, everything becomes pessimistic, pessimism is there, but after some time optimism is there. So I have seen many 3 or 4 phases I have seen. So history tend to repeat itself. So according to him, there are three type of movements: primary movements, secondary movements, and daily fluctuations. Now, when we talk about this primary movement, it is generally on a longer side. Okay, it is generally on a longer side because they have a long period. Okay, and secondary movements are generally, these are, we can say that these are kind of a somewhat corrections. Okay, because if anything is going this way, so where it will go, no, it will be in the infinity. But sometime there is some fall little bit to for making it correction. So somewhat these are kind of a correction. And daily fluctuation is generally also called noise in the market. Okay, so it has to generally, sometimes it said it is a very little bit corrections are there. So if we go by the, see, tech, ultimately this is the technical analysis it says. And somewhat Dow Jones theory we can say that, okay, before I, sorry, what I do, I tell you about the technical analysis, then I come to the Dow Jones theory. This chart I forgot to discuss with you. Now see, when we talk about technical analysis, it is the purpose of technical analysis, because what we do, this is a chart. Okay, these are the prices. Okay, so this is, we can say, this is a declining channel. Okay, this is a peak, then there is a flat, and then there is a thorough true. Okay, so now see here, it is very important to identify the points. These are the buy points. Okay, these are the buy points. And one second. These are the sell points. Okay, now in technical analysis, this is the main point we have to identify. Okay, and this is a sell point that we have to identify. So it is the, basically we can say, is the crux of the technical analysis, but it is difficult to identify. Okay, so we can see that this is a market move in this tandem. Okay, and this logic was given by the, somewhat it is given by the Dow Jones. Okay, according to him, what he has said, see here it is a primary trend. Okay, because if we see, one second, I think it is. It is bull phase. Market is rising. Of course, these are corrections. Okay, these are corrections. So we can say it is a kind of a secondary trend and little bit changes. It is called daily fluctuation. So when we talk about the, one second, when we talk about, one second, let me get on the charging. One second, student, just I'm putting my tab with this is system uploading, otherwise it will go down. Yes. Now see, what happens whenever we have to decide for investing, even in the technical analysis, we have to go by the long-term trend, that is primary trend. Okay, even corrections from the correction and daily fluctuations, we cannot form any opinion. It may be possible that suppose generally what happens, I tell you very practically everything what happens. Generally we buy, especially for the new investor, whenever they buy the share. So nowadays, earlier there was used to be print media, newspaper. After that, the in the market, the news channel has come into the picture somewhere around in 1990s. G news channel, CNBC news channel, they have come. But now there is a new trend, and that is on a WhatsApp and social media. Now, in this, what happens? They generally go by the whatever narratives are there. These are the incidents. So we are generally influenced by this. But generally, we have to see if we purchase a share, next day it may be possible that the price may go down. Next day, even price may go down. But we have to see the overall trend, whether the market is in a bullish phase or bearish phase. If the market, see what happens, we have to identify whether, see, that's why sometimes it is always said that fundamental analysis and technical analysis both are very important. Of course, technical analysis go by the prices. Suppose you have bought a share, okay, say rupees, I just give you an example. You have bought a shares, one second, just say 500 rupees per share. Now tomorrow you see in a newspaper or somewhere, the prices has gone 490. So you will say, oh, I have incurred a loss. Next day it comes 480. You start also feeling I have lost. But at this moment, if you have done some fundamental analysis and you see that the intrinsic value of the share is enough, and that's why it comes into the picture overpriced and underpriced share. Okay, you are confident that the intrinsic value of share is 600 rupees. So even though it is market is 480, you are confident. Yeah, its worth is 600. Somewhere nowadays, later it will come to 600 or 550. So of course, that's why we have to compare the both. So according to Dow Jones, it says primary trend is like tide. They are very huge, like tide in a sea. Secondary is waves, okay, and minor is the ripples. So he has compared these three movements with the C. So according to him, you have to identify the trend where now, according to Dow Jones, you have to identify when there is a going to primary trend is going to reverse. And this is a moment where you start selling the shares. Of course, you cannot start the selling the share in a day, but it is the best time. So best time to buy the share is this here. So best time to buy the share somewhat here and sell the share here. So because here the bearish phase is going to start. Okay, so phase one is accumulation phase. You start accumulation. Okay, here more buying, selling. Some investor may not buying, selling. So it is a correction. Sometime you start buying. Then some seller starts selling in anticipation that, because see what happens. Like here the share has come for 500 to 490. Next day 480. Some investor may start selling the share, panic selling. In that case, some informed decision or some very well informed investor will start buying the share. Oh, share is coming at a cheaper price. So ultimately is correction phase. But as the start picking up, now again, suppose if this price comes to 510, say in a week or 2 weeks, the person who has sold it at 480, he will say, I have done a loss. Okay, so he will say, this share is very good, we should purchase it. So people start buying it. So this is come to the phase 3. Okay, as the phase 3 direction ends, the direction starts changing. When too much buying is there, too much market optimism there, then it starts falling. Okay, then it comes says average comes from each other, average must come from each other, because he says that these two average should match with each other. Okay, volume must come from trend. It is always said, he says that if the prices are going up and volume is also going up, then it is a bull sign. Prices are going up but volume is not there, it is means the investors are not that much confident in the market. Okay, a trend is assumed to be effect until it gives a definite signal that it has reversed. Okay, now there are some concept like support and resistance level, trend lines, moving average. So all now, okay, before that, what we do, we discuss another theory, elite wave theory. Of course, we will discuss the same. Elite wave theory is somewhat, it is on the line of Dow Jones theory. But what he has done, he has divided his analysis into 8 waves. Here same, he has pattern of the waves. Okay, so according to him, these are the some impulsive waves. And these are corrective waves. Okay, so he has divided into analysis into impulsive, and ultimately he was saying what the Dow Jones has said, but only the saying is quite different. Okay, so what he says, see, first the prices have come to first, then it has come to 2. Okay, when it has taken another jump, it is more than this height. Okay, so this somewhat it is bullish. Okay, here again there is a correction at this point. Now again this has gone up this height. So this is somewhat bullish phase. After that, what happens? After it reaches its peak, it start getting again correction. But now this time again goes price, but this price is less than it. So it is somewhat start the bearish phase. Okay, so now this is the indicator somewhere where the trend start reversing. So it is always best is a time to sell the holding. Okay, to identify the wave, their pattern, to confirm the time, and generally there are some ratio analysis is there. Okay, this is the ratio somewhat is there. Okay, so according to this ratio, we can determine whether this is a peak time. So we should sell our holding. Okay, so we have said that Z divided by one second. Okay, so Z divided by X. Somewhere it come nearby this. So it is a time to disown the holding. Now next theory is a random walk theory. Okay, according to this theory, the prices of the share does not follow any pattern. They are random. Okay, according to them, according to the random walk theory, the market, I think it has been started, it has been propounded by Egon Fama. So according to him, market has no relationship with the fundamental or technical analysis, and to some extent, it has been observed. Sometimes we are expecting the market will fall, but it rises. So it says that it moves in this manner. He has compared it with a very good example. Suppose a person is standing on a corner of the street. Okay, so he will go straight like this. But if a drunkard man is there, how we move? He move like this because he is over drunk and he cannot walk straight. So this is he has compared with the stock market or prices of the shares with this pattern. So this is somewhat these three theories are there. Now, when we talk about technical analysis, so one part is very important, and that is comes the chart analysis. So when we talk about start with the chart analysis, these are some tools: price and volume charts, price patterns, and tools and indicators. Okay, first of all, what is important when we start with the technical analysis, we have to draw the prices. Now these can be bar charts that you have studied in the stats. Line chart, very simple. Then point and figure chart. I will show you how it behaves. And then candlestick chart. Now, generally, bar chart is not that much popular. Line chart is popular. Point and figure chart has not that much in use. But candle and figure chart nowadays is used very much. Okay. Then let us discuss these three charts quickly. Okay, here the three important points, you can say parameters, are relating to point and figure chart is OHL. It is also called OHL. C, opening price, highest price, lowest price, and closing price. Okay, now in the study material, we have given like this. See, this portion is called wick. And this body called candle. Okay, what happens? This is the opening price of the day. This is the highest price. This is the lowest price, because in a day, the price fluctuates. And this fluctuation is overall recorded in here. Somewhere price may move here in between, but these are the prime prices, because generally we go by the opening, closing, lowest, and highest. See, if opening price is say I say highest price of a share has gone to 250. Okay, it start closed at 240. Okay, it has opened at say somewhere around 1 second. I think his computer is little bit slow. Okay, somewhere it has gone 200 and this is 180. So this candle is blank or white. Okay, so here it is when, but now it is white. So it we can say that closing price is greater than opening price. But sometime what happens? Opening price may be more than closing price. So this candle is shown as a black candle. Okay, so here our opening price but nowadays with the advent of the computers on all the screens are there, this candle is shown as green candle. Okay, so these are now highlighted as in a green color. Okay, on the other hand, these candles are now shown in the red formation. Okay, so now this is a practical. Now it is shown. So this is the candlestick chart. Okay, it helps us to understand. Say if the green candles are more, so it is somewhat kind of a bullish phase. And of course, there may be some one or day red candles may be there, but it is generally the green candles are more. It is a kind of a bullish phase. Okay, if the red candles are more, then it is somewhat it is an indicator of the bearish phase. Okay, student. Now let us proceed further. So this is a candlestick chart. Now next is our there is an important chart is point and figure chart. I explain you. There is on numerical is there where we start with I think we have I have also shown here. 1 second. If there is a chart, otherwise I just 1 second. In the last class, I have shown it by way of some graph paper. Okay, this is a point figure chart. Okay, so we start with this. $24. Okay, if price moves more than one, so we put another cross here. So generally, what happens? This cross is for price increase. Okay. So here it price has gone down, here has gone. Now what happens? Say price has come down to from 28 to 26. So what they do? We change the column. So this is the problem with this point figure chart. Time element is missing. If the in a say for the week, this movement is there, so it will show 1 week there. After 1 week, if this movement is for the 2 day, So they will show all the 2 days movement here. After this, now what happens? Price goes down, from 28, it has come to 26. So we put 3 zeros here. Again, it has gone to 23. Okay. So now when it has gone to 23, suppose on the, this was say 5 days. This is 2 days. Now 8th day, from price has come to 25. So, sorry. Again, we start putting the cross. Sorry. But nowadays it is little bit of little use, because with the coming of the candlestick and other tools are used, because time factor now is very important. So this is a problem with this chart. Okay. Let's quickly come to this another part, and because we have to start with the MC. Okay, so this is a point figure chart. Now, here, 1 second. Now these are some price patterns: channels, wedge, head and shoulders, triangle, coil formation, flats, and double top. So these all are patterns. Okay, these are all our patterns that are covered in study material. Okay, so generally, see, there are many patterns are there. Of course, they're like saucers. Okay, cup pattern is there. So there are many patterns are there, but we have just covered here this some, and these are patterns are very important, because in this current examination, January 26, there were one question based on this. Sorry. Based on this patterns. Now there is another tools and indicators. These are some mathematical indicators. Okay, now let us discuss quickly these one by one. Okay. Sorry. Now here the breadth index are generally, we can say these are some dividing net advances or decline in the market by the number of issues traded. The breadth of index either support or contradict the movement of the Dow Jones. So here what happens, we see the overall market analysis, see number of shares, some how much prices have increased there, divided by number of shares. So it indicates on an average this much of price has increased. Similarly, there may be some shares, there may be decline. So we compare these ratios. Okay, from this we judge what is our, we can say, what is our trend. Okay, volume of transaction, it is also very good indicator. Okay, confidence index. Now what is confidence index? I tell you, this is very interesting point. since we have done the course, now there is a concept of bond valuation. Okay, if I discuss with you bond valuation, there are two type of bond. One is highly rated or lower rated bonds. Okay, now tell me what is the difference between these two bonds, highly rated and low rated bonds? Can anyone tell? Yes, please. Anyone?
No, sir, we don't know.
Yes. Yes, Geeta, you were saying better something?
Sir, I am not aware of this.
Okay, you're not aware of this. Shalendra? Okay, I just tell you now. It is, say it is triple A. It is plus BB. Now, did you recall now?
Sir, yes, sir. Rating is given by some companies and all.
Yeah. So what does this rating indicates?
To purchase where when these ratings are good, so its position is good, sir.
Okay. So what happens generally? What happens? See, highly rated bonds generally are considered to be a high yield bond. Okay, generally they are considered to be a high yield bond. So what happens? Generally their ratio is considered very important factor. Their ratio is considered to be very important factor. So see, if it is giving a yield, say 7% yield to maturity, and it is giving somewhat because it is a kind of a lower risk, so generally they may have a lower yield. Okay, the expectation is not much that they will refund the money. So I say it is somewhat around say 5%. One second. Somewhere it is saying 5%. So what happens if I compute their ratio 5% divided by 7%? This ratio is less than 1. Okay, now what happens tomorrow in economy or in the market? There is a optimism. Okay, there is a optimism. So even though these lower bonds are there, the it is start expecting that this company will perform the well. Okay, this company will perform the well. Okay, so their yield is also start rising. Say it becomes 7%, even it is equivalent to high quality bond. So somewhat it becomes 1. Or so it indicates that now there is a positivity in the market. So then it is some kind of a bullish phase. So all these are confidence. It creates a kind of a confidence indicator that it is a confidence is in the market. Okay, so then there is a relative strength index. Okay, it shows which bullish factor strength of which bullish factor strength is there, or this odd market theory, lot theory I have explained to you. Now with the dematerialization, this theory has lost its relevance. So these are some formations. Okay, you can discuss it from the study material because there you if you have any issue you can discuss with me over the telephone as well. But please note that whenever we discuss this any formation, so there may be some contradictory from some views because there is no exact or is a kind of a science thing, kind of a thing where we can form any theory. So everyone there has own perception. So it is quite difficult to pinpoint one, but of course some patterns are very identifiable with any our body, like head and shoulders. Okay, reverse, top and bottom. So all these are indication with the prices. So these can be identified, but how it will react further, it is up to every investor. Okay, now we come to this is like I have discussed in the last class. Everything you can refer from there because time is quite less now here. It is a revision class. So 1 second. So all these are we have covered. Now there is some tools. Okay, indicate arithmetical average, exponential moving average. It is numerical is normally very popular. Okay, so generally what happens? It gives the more importance to the latest price. So, and there is one important factor, smoothing factor is there. It is very important how we calculate because sometimes it may not be given in the examination. Previous day, it will be given in the examination. Okay, even if it is not given, so you take the price, say it generally it is calculated from some price base. So even you take the price of first day, it will be considered as average exponential moving average of previous day. And from this, we can compute determine the signal. What are the buying signals? Stock price rising through the moving average line. The graph of the moving average line, it is flattering out. Okay, so these are very important at this table, and this you should remember this table because on this basis you have to take the judgment of the whether you should buy the security or sell the security. In the last part, we are coming with the evaluation of the technical analysis. Okay, somewhat says ki what is if we talk about I am just saying if we say that technical analysis and fundamental analysis. So quickly I say that what to buy, it is we derive from fundamental analysis, and when to buy we decide from the technical analysis. Okay, somewhat it is kind of a science because there are theories like there like dividend growth model, okay, earning per share, free cash flow, so all are there. Okay, somewhat it is midway between art and science. One second, I think it is getting slow. Okay, it is somewhere midway because here theories are there, but how you apply them, it is up to you. Okay, it is study of financial elements of the company. It is somewhat study of price channels, price charts, such as channel, etc. Signals generated by corporate actions like declaration of dividend, okay, change in management, signal generated by market movement, market actions, more buying. 1 second, I think it is gone. I think it has wiped out. 1 second. I am writing it again. I think it has gone down. Financial elements, charts, etc. Signals generated by corporate actions generated by market actions. Chances of multiple interpretation is lower. See what happens. Generally, everyone knows the betas of a company may be same beta may be used by, except point difference. We shall use, everyone will use the same beta. Okay, but if we for the technical analysis, totally it will be different. Okay, higher chances, higher multiple interpretation. That's why I am saying technical analysis is a kind of a everyone has their own views. Leave it. This point is. So these are the major differences between the technical analysis and fundamental analysis. Okay, now let's proceed further. Now we are coming to EMH. Quickly we discuss the EMH. EMH theory says about the market reaction to the information. Basically, there are three forms: strong form, and weak form, and semi-strong form. If we go by the first of all, we discuss this is efficient market and inefficient market. Efficient market means that reacts to the information quickly. Here the price was there, but immediately some information comes, the share price comes here. It is somewhere indicator of the efficient market. On the other hand, in the inefficient market, it reacts slowly. So these are the forms of the market efficiency. Now, when we talk about three forms are there, one is weaker, another is strong, it is semi-strong, and is a weaker. Now, weaker generally late reaction to public information. Okay, semi-strong quick reaction to the public information, and strong form means insider information. Nowadays, what is happening on a WhatsApp or a social media, any information comes, sometime it has been observed that the market reacts. Okay, even investors start reacting. But please remember, insider information nowadays is a crime. Okay, earlier there was, now Chandra was asking about how the SEBI acts. Now, before 1992, before the insider information was allowed. Okay, and it was used to be there. An investor used to earn a huge money. Some speculator use, but nowadays insider information cannot be used. Even if you know that the companies, there are restrictions on the company CFOs on the buying of the share of the same companies. Even they have to give the detail of their family members. Now, my brother, some days back, my brother asked me about the details of my PAN number and other details. Man, I asked him why you are asking, because he's a CFO in a company. He said, in my company, there is a rule, there is a SEBI requirement. I have to submit, because from there, you are with your PAN number, they will track whether the shares of these companies are in my name or not. So nowadays, these are behaving like this. So insider information now is a crime, or in USA, it is a major crime. because it distorts the market. Market should go by the demand and supply and other factors. But if any person has a prior information, it is distort the complete system. So generally what happens, sometimes some prior information, insider information comes, and if the market start reacting, so it is also set the strong form. Okay, so this was overall from my side. If you have any question, you can discuss with me, because since you have already gone through the previous lecture, so I will start with some MCQs. So if you have any query, you are free to ask. Otherwise, I proceed to MCQs. Yes, there are some tests are there. Run test, filter test. Okay, for these are numericals are there, that has been covered in the study material. And so far as the empirical evidence is concerned, these are differ from time to time. Okay, we cannot say any particularly any theory is there. Sometimes it keeps on changing. So there are numericals are there, 3 tests, even autocorrelation test is there. And there tools are there that you refer from the study material. There are some available are there, you can refer them. Okay. Okay, student. So let us start with the MCQs. Now you start giving the answer so that we can discuss the same. Either you can give on a chat box if you want to. This is the first MCQ. Which of the following is a leading indicator of economic activity? Or we can say indicator of economic indicator, leading indicator of economic indicator. Yes, Chalender, you are right, beta. Any other? The correct answer is stock market. Okay, when the stock market is booming, it is a good indicator that it is a leading indicator because it gives a signal that economic is going to be performing well. Next, which indicator moves simultaneously with overall economy? Yes, Sachi, you are correct, beta. Yes, Shalendra, you are also correct. That is GDP. It is an indicator that moves simultaneously. GDP normally data are generally available monthly wise or somewhere it is available. Interest rate generally prevails sometime later. Okay, we can say it is some kind of a coincidental indicator. Okay, the unemployment rate is considered a. Yes, Saji, you are correct, beta. You are also correct, beta. Both are correct options are there. Sometimes it is also used as a coincident indicator. Even sometimes we can use as a lagging indicator. Generally, if we see fall or increase, they are generally lagging, but current unemployment situation is considered as a coincidental indicator as well. So both answers generally considered correct. Fourth question, which of the following is generally classified as a coincidental indicator or coincident indicator? Sachi, not correct, beta. Here you have to see bank lending rate is generally, you can say it is also correct. Bank lending rate generally bank. Okay, yes, you are right. It is, this is bank lending rate. Next question, I just drag it here below. The primary purpose of lagging indicator is to question number 5th. Yes, Sachi, you are correct. It is to confirm the trend already. Somewhat to create a speculative forecast, but generally lagging indicators are confirm the past trend, because of course on the basis of we can take the action, but speculation is generally where when it is very unknown. Unemployment rising after GDP declines confirm that the unemployment is no, it is after. Sachi, it is after. Please see. Shalendra, you are nearby, because see here you have to consider the word after, and that is the main prominent feature of lagging indicator. Okay, lagging means after that. Forward indicator not. It is somewhat leading and forward is the one and same thing. Lagging means after unemployment rising, after GDP declines. So GDP was, we can say, coincidental indicator, and if the unemployment is rising, so it is an after effect. Okay, so it is the answer is C. Question number 7. Fundamental analysis primarily focus on yes, Saji, you are correct, beta. No idea, sir. Past trend. No, beta. But a past trends, fundamental analysis generally don't go by the trends, because generally trends are for a company analysis. That means, of course, trend analysis is a past trend is there, but main purpose primarily it is says, of course, and a past trend is a kind of a technique, but primarily it focus its purpose. It is intrinsic value of the securities. Yes, very good. Okay, I think you have given the correct answer first, but it has taken come down. Okay, now technical analysis is mainly based on Shailendra, just near, no, you are just, again you think over the same. Technical analysis mainly based on. No, Sansi. Yeah. Geeta, now you are correct. Shailendra, now you are correct. Okay. Yes, Sachi, now you are correct, beta. 1 second. It is price and volume movements. Okay, because these are generally fundamental analysis, fundamental analysis. Dividend model is also fundamental analysis. Which of the following is commonly used in technical analysis? No, Shalendra, please think it over again. Sachi, you are nearby, but think it again. Yes. No, you are correct. Geeta, you are correct. It is relative strength index because this is also concerned with the fundamental analysis. Which approach assumes that the market price already reflect all informations? Please think it only. Yes, Geeta, you are correct 100%. Because this is one of the typical question. That's why Sachi, I am telling you, please think it over again. Yes. No. Shalendra, you are also incorrect. Think it over because for this there are three possibilities: strong, semi-strong, and weak. See here, one of the very important Sachi, no, beta, it is not C. I tell you, one of the very important assumption or tenet of the technical analysis: market discounts everything. Okay, whatever the information is available, that is discounted by the market. Okay, so that's why when it discounts the, so it reflects everything. Technical analyst assumes that whatever information is available, it is discounted by the market. Because see, I tell you one thing. Sometime a news comes in the market that say this order is this company is getting some order. So it is comes to your mind, yeah, why should I not buy the share of this company? It is going to rise. But please remember, market has already reacted to the same information. The moment it has come to your, you have read the newspaper in the afternoon, but this news may have been was public, or it has been some announced two days before. So market have already reacted today's morning opening prices. Okay, so it is basically the technical analysis that assumes market discounts everything. Okay. Very simple. Yes, very simple. Okay. Yes, very good. One second. Yes. Very simple, 13th. Yes. Which statement is correct? Yes, very good. Sachi, you are incorrect, beta. Shalinda, you are also incorrect. Here, it is with the fundamental analysis that computes the intrinsic value. Yes, now you are correct. Okay. Okay. Last MCQ. Very simple. Very good. So this is C. Yes. Yes. Correct. Okay, students. So with this, we come to the end of this topic of the security revisionary class of the security analysis. Now, student, as usual, if you have any still have a query, you can contact me over this telephone number, or you can send us the email at this email ID. This is dot here. Because in today's class, we have discussed the topic of security analysis completely. So you have revised. It was a kind of a revision lecture. So please go through the all numericals from the main class. Still you have any doubt? And please remember one thing, of course, in our revisionary classes and generally all the questions are solved on the Excel. But my request to you, please solve this question with your help of a calculator, because in the examinations, laptops are not allowed. So please make yourself habitual of calculating these all carrying out all calculations with the help of calculators, because in the class some faculties are using the Excel sheet because of the paucity of time, okay, and for the quick revision or etc. But my request to you, please use the paper and please make practice, because time management is very important in this paper. You should have a, and one very important here where student I have noticed that the calculation whenever you the error, it should be error free. Okay, it does not mean that if you are punching 5 on the calculator, you find punching 50. Okay, similarly, instead of adding, you punch the minus, because here the complete answer will change. It is not a kind of a balance sheet accounting paper where the balance sheet match, then everything is match. Here there is nothing kind of a thing. Okay, so this is one of the very important point I want to discuss with you. So student, if still you have any queries, you are free to ask me. And this is just MCQs are open, generally generalized MCQs are there. And the purpose of this MCQ is just to clear the concept, but in examination, only case scenarios comes there. Okay, student, thank you for patient listening. And in this next class, we shall come out with a new topic. Okay, and revise whatever we discuss in the class.
Thank you, sir.
Thank you, beta. Thank you.
Thank you, sir.
Thank
Sir,
you.
in
Thank
this
you. Yes.
candlestick chart is there, no? In that we have to write there black and white only, not green and red.
In the study material, we have given black and white, So you go by the same. See, now it is a very good question. Whatever we have discussed in the class, some more differences we have discussed, the technical fundamental analysis. These are from your understanding. But my request to you, whenever you write something, refer the study material. Okay, because of course we can add the points there as per your understanding, but the main point should be come from the study material. Of course, sometime examiner consider other points also, but generally model answers are prepared on the base of study material. So please refer the study material. I have given you the red and green color. Now the practicality is used. Okay.
So starting MCQs are there, no? 4 to 5 MCQs. It is not there. That examples are not there in study material. So I don't know about that. Leading and leading and all these are there, no?
Okay.
Yeah, this I don't know about this. This
one.
unemployment and everything. Yeah, sir. It is not there in the.
Yeah. You can say that. Generally, I have discussed in my class now. Abhi in this class.
Yes, sir.
And on that basis, I was asking these questions. So I want to know how much you can retain.
This is
Anyway, don't worry. Generally, our discussion, we keep our questions, framing, etc., up to study material. Okay, see, this is a type of a open-ended topic. So here we generally consider other ways, assumptions also we consider. Here we take a liberal view. Don't worry about the same. Okay. Be confident in the examination.
So thanks.
One question is out of the way. So result is coming before Holi or after Holi?
Even I am not aware, very frankly. Okay, because it is I cannot sure about, because today I will go to the office just now. Maybe then I come to know.
Because yesterday there was rumors before Holi now in some
but
media.
Actually, I never see the social media. Okay, so I'm not very active on any social media. So I generally go by the, you can say, fundamental analysis. You can say that. Okay. If any information comes to me officially only, then I can make a declaration.
And so one more thing, this Olympiad certificates will come. Like my kids have given the exam, but certificate has not come yet.
Your kids are.
That Olympiad is there, na? ICAI Olympiad for 8 to 12.
No, you are doing CA now.
Yes, sir. Yes, sir.
So I think your age will be, I think, somewhat 40s around.
Yes, sir. Yes, sir.
Okay.
We all three, I think, we be same age.
No. Okay, do one thing. Can you give me a call at this number in the lunch? Okay. Somewhat around 11, somewhat around 11:30. You give me a call at this number.
Okay, sir. But Olympiad certificate will come in their portal. I think certificate will institute will issue na.
No, I will get you connected to the concerned department.
Okay, sir.
Okay. And still problem is there. You can contact me again for this matter.
Sure.
Okay. Any other help you need from my side, if you want to get connected to any department, even you can call me that number.
Sure, sir.
You are free to discuss with me. No problem. My number is there. That is because I normally, except from the study, even I try to assist the students other way around also. Okay, so that I can get the, because sometimes you may not aware to which I should approach. Okay, I can help you in this matter as well.
Sure. Thank you, sir.
Thank you. Okay, Shailendra ji, thank you very much.
Thank you, sir.
Okay, have a nice day. Have a nice day.
Thank you, sir.
Thank you.